Good evening, everyone, and welcome to this very special webinar of Audit to FP&A by FP&A Professionals Institute. The most common question that I always get asked on my LinkedIn DM is, how do I move from an audit account and a tax role to a financial planning and analysis role? And today, we will not only give you a taste of how does it look like to work in FP&A, we will also give you some concrete steps that you can take to move towards your FP&A roles. Okay. So first of all, thank you so much for your trust. You have taken out your valuable 60 minutes to spend time with us to learn something new. So thank you for your trust. Pat yourselves on the back for taking action. You see, less than 3% of the people take active action to develop their careers. And the fact that you have carved out your 60 minutes to spend time with us to learn about FP&A shows a lot that you care about your finance career. So pat yourselves on the back for taking that action. A little bit about us before we begin with. My name is Dhawal Parvatikar. I'm a qualified chartered accountant. I've also completed my one-year management program from IIM Ahmedabad. Over the last 16 years, I've served in various finance leadership positions. I've served as CFO in India and in the Middle East across various multinationals, built and led multicultural teams. I'm now the co-founder and lead faculty at FP&A Professionals Institute. I've mentored thousands of chartered accountants and finance professionals. Over the past 5 years, I've also been an active online instructor, and I've trained, coached, and mentored more than 5,000 professionals on various topics like FP&A, business partnering, data storytelling, CFO coaching, career coaching, and so many other things. And I've also had the privilege of building a strong CFO community in the Middle East of 200 plus CFOs. I've hosted more than 10 events, and all these 10 events, somewhere I've gone in as a speaker, somewhere as a panelist, somewhere as a host. And I've had this privilege to meet more than 200 to 300 CFOs in the last 12 months, which has helped me understand and study what it takes to be a CFO very closely. I'm joined by my partner, Asif Masani. Asif is also the co-founder at FPI. Asif, a quick introduction from your end.
Thank you so much, Dhawal. About me, quickly, I've been working in finance and most of my career has been in FP&A. So out of the 15 years that I have been working, I've worked in FP&A for more than about a decade now, so more than 12 years. I started working with Citi as an analyst back in 2013, and my most recent role was the lead for APAC for a tech company called Coursera. So after that role, me and Dhawal came together and co-founded the FP&A Professionals Institute, which you see right now. We have been working on this for over 3 years now. And along the 3 years, we have managed to train more than 5,000 students across different courses and certifications. So that's a little bit about me. Also, what we have got as an opportunity in the last few years because of writing about FP&A and because of talking about and building the institute is connecting with some of the biggest and the brightest minds across the globe, right from North America to Europe to Middle East. And what we try to do is we try to bring in all the insights, all the experience of not just Dhawal and myself, but all the experienced professionals coming from different geographies, coming from different industries in our books, podcasts, and courses and certifications. So that has been our objective. And as I mentioned, you've trained, that number might be older one. We must have trained more than 5,000 students across all of these courses that you see on the screen. The most popular ones are the FP&A Masterclass, which is the beginner to intermediate level program for people who want to get into FP&A roles. And then the second one is the Certified Global FP&A Professional, which is the advanced CA certification, which we will also talk about in the end of the webinar. So thank you so much for joining. With that, I will pass on to Dhawal for the today's session, which is Audit to FP&A.
Thank you, Asif. Always happy to partner with you. So what today's training is about, right? So for the next 45 minutes, get rid of all the distractions. So we will try and understand how is it different to work in an accounting and an audit-based firm compared to a classic finance function in a manufacturing, trading, or a services company, right? And this shift is definitely possible. So what are we going to cover today? We'll start by understanding different roles on the finance side and on the industry side. Where do you fit into the structure if at all you take up a finance role? How finance is going to be different from an audit and accounts role? What are some of the nuances or what are some of the skill sets and mindset preparation that you need for finance roles? And some tips to prepare for this shift. While you might not still be in a finance role, but how can you plan for moving towards an FP&A role? That's what we'll be covering in the tips to prepare for the shift. And finally, we'll talk about certifications and courses in FP&A which are slowly gaining popularity these days. Okay, so all in all, the next 45 minutes are going to be a lot of action, packed with a lot of action. So get rid of all the distractions, focus on what we are covering. I'll also cover one of the case studies, what we normally teach in our program, so that you get a taste of how is it like to work in FP&A as well. Cool. So first of all, let's start with some of the success stories with people who I know, right? So I know one of my friends who started as a payroll manager, as a safe fresher in one of the large software companies. Today, he's head of finance and also heading the operations, head of finance and operations for a US-based tech company, and he moved to the US. I know somebody who started and served for 22 years in audit in KPMG. Today, he's group CFO of a large multinational bank in the UAE. I know somebody who started as an audit assistant at Arthur Andersen, the then firm Arthur Andersen, and he became the group CEO of an advertising company, not the CFO, CEO of an advertising company. So the possibilities are endless. You have a long career. So start preparing for different kind of roles. Be open for accepting different kind of roles. And hopefully you will be able to carve out your own success story like one of these professionals that I know. Okay, first of all, let me start by reassuring that yes, moving from audit and accounts to an FP&A role is definitely possible. There are a lot of transferable skill sets that you can leverage. There are a lot of transferable analytical skills that you can leverage, and then build that as a bridge to move over to the function. And we learn how to do that. So before we begin, let us understand the broad industry landscape available out there, right? So they can be broadly divided into 4 broad sections. So one is your public accounting space, where you have your Big Fours, the consulting firms, where typically you start in an audit or a consulting kind of a role. Then you have your banks, retail banking, corporate banking, different kinds of banks, right? Different banking services, banking and banks per se. And then you have your financial institutions, right? Together, both of them are called BFSI, right? Banking and financial services industry. In financial services, you have your portfolio management, asset management companies, private equity, wealth management, investment banking firms, all of these different kind of institutions. And then you have what I call the classic corporates, where you are working with a manufacturing or a services kind of a company. There is a finance function. You're working in a role in a finance function, which could be around accounting, FP&A, audit, compliance, whatever the case might be, right? So these are the broad sectors that are available out there. Now, the best part is that every sector that you see has a specialist FP&A role in it. Banks also need FP&A. Institutions also need FP&A. Corporates also need FP&A. So there is scope for FP&A everywhere. And day in and day out, we are seeing a lot of requests coming to us for talented FP&A professionals. So there's a lot of scope in any industry that you might want to go for. Now, what are the different profiles available out there? Before you get into specialist roles, let's understand the broad landscape of what are the different kind of profiles available out there. No matter, there could be n number of different kind of finance and accounting roles out there. You can group them into 3 broad buckets. I'm just going to quickly cover this. 3 broad buckets are reporting and compliance oriented bucket, commercial or business finance, finance business partner, FP&A bucket. And then everything that doesn't fit into these 2 buckets will be a specialty finance function. So the first bucket is largely about compliance-oriented activities like preparation of financial statements, consolidation, notes to accounts, statutory audit, internal audit, SOX audit, tax returns, right, regulatory reporting. All of these is financial reporting and compliance. And most of you who have started with an accounting qualification like a CA, CMA, CPA are very familiar with this bucket. Then comes the commercial bucket, which is all about management reporting and supporting the decision making in the business. Activities are like budgeting, forecasting, different types of analysis, revenue, cost, margin analysis, profitability analysis, customer level, product level, branch level, SKU level, division level, regional level profitabilities. Then different type of management commentaries after the month-end close, month-end reporting pack, working capital management, evaluating capex proposals, contracts, pricing, costing, variance analysis, trend analysis. All of these things are related to the performance management of the business. So that is what is the second broad bucket that you will be working in. And then the third broad bucket, which are very specialist expert tasks like treasury, forex hedging, M&A, investment management, structured finance, supply chain finance, right? Or functional consultant roles like you are a SAP consultant or an EPM consultant or a BI tool implementation consultant. All of these things are specialist roles which can be captured in the expert tasks bucket. Now, typically, in a finance function, if you have to grow to the ranks of becoming a CFO, right, you will have to be familiar with both of these buckets. Now, this bucket is typically your qualification. It's your accounting qualification that will give you exposure to this bucket. But whereas the middle bucket that you see is largely experiential in nature. You'll have to work on a budget and understand how it is. You'll have to work on a forecast and then understand how it is. So this project is experiential in nature, where it may not necessarily be learned from books, but definitely can be learned from focused training and coaching programs. Okay. Now, what will your role be once you move into an FP&A kind of a role? Now, your role could be broadly categorized into 4 different types, right? And you could end up in one of these kind of roles. One, it's a regional role where you are part of a company which is, let's say, North, East, South, West. You're FP&A manager North, you're FP&A manager East, or something like that. And you're actually reporting to a corporate FP&A. Now, you could be on the corporate FP&A side as well, and you're liaising with these different regional FP&A teams as well. So that could be one of your roles. You could be in a business unit kind of a role, where you could be part of an embedded finance of a business unit. Take the example of an oil and gas company, which has, let's say, 3 different business units: aviation, gas, and lubricants. Here, you're part of a embedded finance team. Let's say you're a manager aviation, and you are basically monitoring the production, sales, marketing, all the supporting these functions, and then you are dealing with corporate finance team on all these topics. Or you could be in the corporate finance team, where you're dealing with the embedded finance teams to understand the performance of these business units, right? Then the third thing could be a global shared services or a center of excellence. Most of the large organizations these days, global organizations, whether they're American or European companies, they're setting up their shared services in cost-effective economies like India, Philippines, right? There you could be sitting here in Mumbai or Bangalore or Chennai in India, and you're supporting the various stakeholders sitting abroad with their FP&A team. For example, you could be sitting in North America, but your team of FP&A analysts could be sitting here in India. So you could be that FP&A analyst in India, or you could be a FP&A manager in North America, where your team is actually sitting in India. Either of the roles are possible if you're in a FP&A kind of a role in a global shared services or a center of excellence kind of a setup. Then comes your project or client-based roles. Sorry, just give me 1 second. Somebody's at the door. Sorry. So then the next role could be your project-based or client-based kind of a setup, right? Think about a construction company. A construction company operates from one project to the other. So there they need to understand and track the project-wise profitability. So you are handling the project finances of that particular in that particular company. Then there could be a client-based finance. For example, I remember when I was working with a large global advertising agency, we had one CFO, global level CFO, based out of Switzerland, who was dedicated for a large commercial bank in Switzerland. Okay, and his role was only to kind of monitor the finances for that particular client. So this way, your role could be managing the finances and FP&A for a certain client or a cluster of clients. Yeah, that could also be your role. For example, in Accenture, there is a very popular role called client financial analyst or client financial manager, where you're actually managing the client-related FP&A or a certain set of client or a cluster of clients. That is what is client-related finance. So you could be in either of these 4 roles that I mentioned to you. Now, how is it going to be different? The first mindset shift that you will need to adopt is that you need to start thinking like a CFO or start thinking like a finance professional and not a accounting and audit professional, right? Now, let's look at and try and understand this with some questions. Your business head will come and ask you, what is the Q1 revenue target for my department, right? Typically, you can refer to the budget document or the latest forecast and answer this question to him. How much have you set aside for LinkedIn marketing for this year? And what is the quarterly breakup? A classic question from your marketing director. After you build all the different kind of marketing budgets, they will come to you and ask you, okay, how much have you set aside for LinkedIn marketing? And when can we spend? How can we spend it? Then out of the 50 headcount additions, how many are we planning to hire in Q2? A classic question from your HR head. You might plan to hire 50 people in the upcoming financial year, but will you hire all of those 50 people on January 1st? No, right? You will phase them across the year. So how many are you going to hire in Q1? How many are you going to hire in Q2? That's a classic question that will come to you basis from your HR head. How much new business do we need to bring in Q4 to plug our shortfall in Q3? A classic question from a CEO or a business head. 3 quarters are over. You are falling short on your performance, but there are plans or there are ways where you can bring in more sales in Q4. Now, how much do we need to plug that? A classic question from your business head or CEO that will come to you. What is the impact on profit if we drop our prices by 8%? A scenario planning question. If you drop your prices, then what will happen? If you increase your prices, then what will happen? If a competitor drops pricing, then what will happen on your sales? All of these are questions that will come to you in your day-to-day roles. Now, if you notice one thing, none of these questions have anything to do with your accounting standards, IFRS, or any of your accounting rule books. All these questions are performance management questions. So these are telling you about the performance of the business. So that is a mindset shift that you will need to adapt yourself to. Start thinking beyond compliance. Move your thinking from compliance to commercial. Okay. So you will have to start to support the business, and to support the business, you will have to understand performance of the business. And to understand the performance of the business, you have to understand performance conversations. Okay, and not compliance conversations. Compliance conversations all center around accounting standards, withholding taxes, GST, sales tax, VAT, financials, notes to account, prior bid items, disclosures, right? Statutory audit, SOX audit, all of these things are compliance oriented conversations. These will not help you monitor and run the performance of the business. You will have to learn performance conversations: revenue, gross margins, product profitability, client profitability, contracts, pricing, budgets, forecast, rolling forecast, traditional forecast, scenario planning, sensitivity analysis, trend analysis. All of these things are performance related conversations that you will have to pick up. Okay. Now, the second mindset shift that is required is that finance is not going to be an isolated function. At regular intervals, you will be collecting a lot of performance-oriented data from these various departments: HR, sales, business development, production, operations, legal team, various departments. And then at regular intervals, you will be providing certain reports and insights to these various teams so that they can plan their activities. For example, you will provide a report to HR, which will help them plan capacity, which will help them plan the headcount additions, because basis the performance of the business, you'll have to plan your additions. Let's say you might have decided that if I grow my business by 10%, then I'll add 2 more people in my business. But what if the business has grown only by 4%? Which means that you'll have to inform the HR that, hey, we are not meeting our targets. So you cannot hire 2 people right now. You can hire only 1% at this point in time. So these kind of conversations you will be having with various cross-functional team members. Now, what are some of the key activities involved in FP&A role? And there could be n number of activities that FP&A teams carry out, but broadly, they can be clubbed under these 3 buckets, right? One is budgeting. Budgeting is essentially your financial plan for the upcoming financial year. So what is the estimated revenue? What are the different set of estimated costs and different set and your operating profit? That is what is your budget. The end outcome of the budget looks pretty much like a P&L statement for your next financial year. Forecast is all about tracking the ongoing performance of the business. For example, a budget is something which I created before the start of the financial year. Let's say I created sometime in October, November for the calendar year. But forecast is tracking the ongoing performance of the business. So what will I do? I'll take my Jan to March actuals and then add my April to December forecast, not budget, forecast. Okay. So that is my Q1 forecast, or sometimes popularly known as 3+9 forecast. What is a 3+9 forecast? 3 months of actuals and 9 months of forecast. If I'm doing it for 6 months, 6+6 forecast. 6 months of actuals, 6 months of forecast, right? A forecast reflects more realistic and latest performance of the business. Then comes your management commentaries. As part of your support to the business teams, you will be providing a lot of different kind of management reports. There, you will be doing different kind of variances: actual versus budget, actual versus forecast, current year versus previous year, current year year to date versus previous year to date, current quarter versus previous quarter, all of these different kind of variance analysis, and coming up with business reasons as to why these variances are appearing. Then comes profitability analysis. Every company is structured in a different way depending on the complexity. Some companies are structured business unit wise, some companies are structured region wise, branch wise. You will have to prepare different levels of profitability, analyze what is performing well, what is going well for you, which branch is doing well, which product is a leader, and which product is lagging behind. All of these performances can be understood only by analyzing different levels of profitability, and these form part of your management commentaries and reports that you are preparing. Okay, so budgeting, forecasting, and management reporting. So these are the 3 broad activities that you will be carrying out, no matter what kind of a company you go into. Okay, small, medium, large, doesn't matter. These are the 3 activities that you will be carrying out. Now, let us understand these core activities with a small case study that will also give you a practical exposure of how a budget is actually built. Now, I'm going to cover this case study very quickly, so pay attention to the case study. And if there are any questions, we will pause and take those questions. But I'll also be asking you some questions in between, and please respond with your answers in the chat box. Don't unmute yourself. Please respond with your answers in the chat box. Okay. I'll be preparing the steps. Just follow along and 100% focus. Okay. Let's start. We are building a budget number or budget for the upcoming financial year for a B2B revenue company. B2B business to business, which caters to other businesses and not directly to the end consumer. Okay, so let's see. You're working with Infosys as business finance manager, primarily looking at client contracts, business unit profitability, and business unit performance. Infosys is a B2B software company providing software services to various clients. Clients come with their requirements. We deploy the team and we provide those services and help develop those custom softwares for them. The revenue generated by Infosys is largely split between retainer contracts and projects. What is a retainer contract? It's an ongoing contract where there is a fixed scope of work and we are deploying our resources and they're paying us either a fixed sum of money or they're paying us a fixed rate card basis. That, okay, my senior engineer is going to spend 100 hours, basis that you will be charged these many hours. So either it is a fixed sum of money that I'll get $10,000 every month, or it is going to be on time basis. That's a retainer contract. And projects are projects where it could be a 3-month project, 6-month project. There could be milestones in projects. After completing one milestone, we will release 15% of the fee. After completing the second milestone, we will release another 30% of the fee. So that's a milestone-based project contract. You are required to work with business lead and prepare revenue projections for 2024. Okay, at the end of 2023, and you're now preparing your revenue projections for 2024. Senior management guidance is to aim for 12% revenue growth over 2023. Now, every senior management, before the start of the budgeting exercise, they would go with a rough target in mind or a rough number in mind. So this time, the management wants to aim for 12% revenue growth in the upcoming financial year. Assume that we are now at the end of December 2023. Remember, you're not in 2024, you're at the end of December 2023. Okay, so let's get started. Classic finance role or FP&A role, what we do, we get ready with our templates, we prepare our templates, right? Here is a revenue for 2024. I'm going to build this 2024 budget step by step. I have my clientele, whether they are retainer clients or project clients. These are my clients within the last year. I have my 2023 revenue, which was $125.8 million. And I have my retainer. If they are a retainer, then what is the monthly retainer I've captured here? Okay. Now, basis some instructions that are given here, I'll now prepare my 2024 revenue budget for the upcoming financial year 2024. Okay. So classic discussion will start by doing some basic conversations with the business head or with the business teams. And basis this, you understand the health of your existing clients and then try to gauge which clients will continue in the upcoming financial year. So I have discussed with the business head and I've captured some notes with the business head here. Now I'm going to look at these notes one by one and try and give effect to build my budget for 2024. Okay, everybody with me? Focus here. Visa will renew its contract for one more year at the same rate. So Visa is at $1 million per month retainer. They will renew the contract and it will carry till the end of December. So I'm just going to carry till end of December. Okay. Then Bank of America contract ends June 24 and there is a strong possibility that they may not renew. So Bank of America is paying us $500,000 per month. The contract will continue till June. And after June, they are not going to renew. So I'm just going to mark this in red here so that I can understand that they're not going to renew. Now, whatever might be the reason, maybe the contract is coming to an end. Maybe they don't need our services anymore. Or maybe the business head feels strong that they might replace a vendor. We don't know. Right now, the business head is feeling that they may not renew the contract after July 24. And we are taking cognizance of it. Then IBM has agreed to renew its contract with an escalation of $100,000 per month. Escalation, increase in fee. So IBM is paying us $1.4 million. So they will now pay an escalation of 100,000, which means the fee will be $1.5 million per month for the next 12 months. ExxonMobil has decided to discontinue our services from 2024. Oh my God, what happened here? ExxonMobil, which was my largest client in 2023, has decided to discontinue our services in 2024. We don't know what happened. Maybe they don't like our face anymore. Okay, whatever might be the reason, but they have somehow decided to not continue with us for 2024. Okay, now I don't know. There will be a lot of this was my largest client, maybe a big team of my software developers and team leaders and everybody is working on this client. I don't know what will happen to them, but we'll look at that. Right now, I just need to give information. I have that information that this client will not continue for 2024. Then talks with Microsoft have fructified. Contract is under discussion, likely to commence retainer from 1st of March at $3.5 million. See, typically in a B2B services contract, what happens is once the client informs you that you have won the pitch, then the legal teams take over. They send the contracts, they exchange their templates, and then a long legal back and forth happens. So typically the contract finalization and the signing on the dotted line takes anywhere between 2 to 3 months. So we are now in December 2023 and we have won the Microsoft client and we anticipate that the contract is going to start. The actual work is going to start from March onwards. So March onwards, we will start billing them at $3.5 million per month. Okay. Then comes L&T has asked for a scope and fee reduction of 20% from April 24 onwards. L&T is paying us $1.5 million. Okay. So $1.5 million for Jan to March. And then they have asked for a 20% scope and fee reduction from April 24 onwards. So if you reduce 20%, you will reduce 300K. So it will become $1.2 million and you'll continue till the end of the year. So whatever might be the reason, it may not necessarily be a performance issue from our end. Maybe the scope is over, maybe some project is over and they don't need the same number of engineers to be deployed anymore, right? Whatever might be the reason, there is a reduction in scope and fee for L&T. Ministry of Tourism are planning for a bigger project, roughly $4 million, split equally between April and May. So Ministry of Tourism had done a $1 million project last year. So this year they are going to do a $4 million project and it's going to be equally split between April and May. Remember, I am in December 2023. Okay. Now I'm putting this in the budget. This doesn't mean that it will actually start on 1st of April. It may start on 10th of April, in which case, when I reach April, I will recognize a prorated revenue. But right now, according to the information, I'm just going to equally split it between April and May, $4 million. Okay. Then last point, management aims to achieve an overall growth of 12% over 2023. 12% over 2023. Okay. Last year, I did $125.8 million. And now this year, with a 12% growth, I need to do at least $141 million. But I just took stock of all my clients and my tally is coming only to $87.3 million. So what do I need to do? The management wants $141 million. So you are the FD lead now. Type in the chat box and tell me what can be done. Management wants to see $141 million. Right now, our clients are saying that the fees will only total up to $87.3 million. So what can be done? Come on, type your responses in the chat box. Aggressive marketing. Okay. Marketing is one thing. You're doing that anyway. How will you plug in the Excel sheet? You are due for budget submission to the CFO tomorrow. Marketing will take 3 months, but you have to submit this Excel sheet tomorrow to your CFO. Come on. More points. We should consider potential new clients in the Excel working. Okay. New clients, new business pipeline is something which we need to consider. That's what Mahesh is saying. Okay. Good point. We can accept new projects or increase the project price for existing ones. See, remember, we've already spoken to our existing clients and asked them for an indication as to what they are going to do in the renewal. They've already told that this is what we'll be giving you. So there is no scope for escalation in the existing clients. So engaging with existing customers doesn't matter. Cut down costs. Okay. So now we are building a revenue budget. Remember, okay. Costs are the next level. Cutting costs is your last resort. If you're very sure that we cannot increase revenue anymore, then we come to the cost exercise. But right now, we're not going till costs. We're only talking about revenue. Okay. Any more thoughts? Any more solutions? Understand the contracts in the pipeline. Again, new business, new clients, what are the ongoing pitches, what are the ongoing client interactions, all of these things is what you'll be checking. Okay, now stop your responses, focus on the sheet. So whoever said new business and new clients, you guys are right. Okay, so we have already evaluated all our existing clients. We have a fair understanding of how do we reach to a $87.3 million, but beyond that, we don't have any visibility. But typically in a B2B services business, old clients keep going, new clients keep coming in. So there is a consistent set of ongoing pitching process that is happening in a B2B services company, right? There is a new business pitch tracker that is prepared. It's monitored. It's reviewed on a weekly basis. Which client, how much are we progressing? Which client is at just introduction stage, which client is at the pitch stage, which client has advanced discussions, which client has reached the contract stage. All of this is tracked through a new business pitch tracker. Okay. Now, I know that some business is going to come from my new business pipeline or the clients that I'm pitching for. Okay. But how do I represent that in the Excel sheet? I need to submit this Excel sheet tomorrow. So there are two ways to do it. One is I can just add a new business line item, okay, and I put some numbers here, assuming that this new business will come from some client in the pipeline that I'm pitching, okay. This is one way to do it. The other scientific way to do this is I add some estimated client names or numbers which reflect a true mirroring of my pipeline. For example, let's say I add client 1 as my retainer, okay, and let's say this client is going to come from April at $3 million, okay. Let's say there is some client in the pipeline. The discussions have advanced already. Maybe I feel that there are 70% probability of winning or 80% probability of winning. I put that client, let's assume that client name is client 1, and I'm putting that client from April onwards, and I anticipate that the contract is going to start from, okay. Is this the only client that we're going to win throughout the financial year? No, right? So maybe we will win another client for a retainer, maybe from May onwards, yeah. Let me put another, let's say $2.5 million, yeah. Okay. Are retainer clients the only clients that we're going to win? No, like Ministry of Tourism, we might get some project-based clients also, which could be in the pipeline. So I'm just putting in some project, okay, and I'm parking some placeholder amounts here. Okay, so I'm just putting in, let's say, $2 million is what I'm getting at the end of every quarter. Now, this is a placeholder. This doesn't mean that it will come exactly on 31st of March. It means I can win a $2 million project anywhere between Jan to March 2024. But just for the sake of exercise or the budget exercise, I have parked that in March 24. Okay. Now I'm seeing this that it is reaching $13.1 million. So maybe I can reduce it a little bit. Maybe let me reduce it to $1 million here. If I reduce it to another $1 million, it will go lower than 12%. So let's say I reduce it to $1 million here. Okay. And now I'm at $141.3 million, which is slightly around 12% or more than 12%, what the management guideline was. Okay. Question is, we can definitely win 2 clients in a year. All I have to do is win 2 clients in a year. That is easily possible. $3 million is not an out of the world amount. I have been serving clients with retainers of $1 million, $6 million, $1.5 million, $2 million, $3.5 million. So I can win a $3 million client. So that's how I scientifically now captured the new business pipeline to be embedded in the budgeting exercise. Okay. Sanjay has a question. In this process, how can we correlate the revenue growth with the actual market conditions? See, forget the actual market conditions. Let's say you are pitching 10 clients right now. Okay. Out of these 10 clients, you can at least take a probability assessment basis your conversations with the business lead that, okay, these 2 clients, I think there is 80% chance of winning. Okay. And this could be the possible retainer. So you take a scientific guess or an intelligent guess and park those numbers or placeholders. Now, this does not mean that this will actually be exactly $3 million. This might be a $2.5 million business. This can be $3.297 million. You don't know that. Right now, you are just taking a intelligent guess basis your conversations that are happening with the client. Okay. Now, once I arrive at my $141 million, which appears to be my budgeted revenue for the next financial year, there are 2 components to this. One is something called as confirmed new business. Confirmed new business is where I already have a contract, and that confirmed new business was from existing clients. That was roughly $87.3 million. So this is my confirmed new business. Okay. Then the placeholders that I have put in this Excel sheet, it is called unidentified new business, which means I don't know where this business is going to come from, but this will come most likely from one of the clients in the pipeline that I'm pitching for. Okay. Now, my question to you is, unidentified new business, which is $54 million, represents 38% of my total budgeted revenue for the next financial year. Now, the question to you is 38% a high number? What I'm trying to tell you is, I don't know where 38% of the business for the next financial year is going to come from. Is 38% a high number or a low number? Type your response in the chat box. High or low? Come on. Easy question. High. Most of you are saying high. Okay, come on. High or low? I want everybody to type high or low. Okay, high. Most of you are saying high. Okay. So most of you are saying high. You could be right, but let me give you some context to this. The question is incomplete. If in the average of last 3 years, we have achieved anywhere between 30 to 40% of new business every year, right? Then this 38% is not high. It's achievable. But if in the past, let's say last 3 years average, I've achieved new business in the range of 15 to 20%, then this 38% is high. I need some concrete information or a confirmation from a certain client, at least an email confirmation from the client, to ensure that whatever new business I've taken in the pipeline makes sense. Otherwise, 38% is extremely high. I would then go back and advise the business that 38% of the business, new business, has never been achieved in the past. Do you still want to go ahead with this? Are you still comfortable going ahead with this submission? Okay. And once this number is finalized, this number is then submitted to the CEO, CFO, whoever, and then the budget number is approved by the board, and this becomes your target or budget for the next financial year. This is our B2B revenue budget is built. Okay. I've also captured all the steps here. If you just unhide here, you will get all the steps that we just used to build the entire budget. I'm going to just share this working with you in the chat box. If you wish to download it, you can download it. I'm just going to share it in the chat box. Okay. Once you download it, just type done in the chat box. Okay. Prashant has a question. Till then, let me take this. But it is practically possible. Is it practically possible to achieve 30 to 40% in new business every year? Not every year. We are talking about the current upcoming year, right? Some businesses, it's possible, See, we are not talking about 30 to 40% growth, remember. Prashant, don't get confused between the 2 aspects. We are not talking about 30 to 40% growth. Growth is only 12%. We are talking about 30 to 40% unidentified new business, right? I hope you are able to appreciate the difference. Growth is only 12%. Considering the market trends, 12% growth is easily possible. Okay. In some businesses, new businesses could be as high as 60 to 70%. Take the example of an architecture firm or an interior design firm. They might not operate on retainer basis. After one project, they'll have to hunt for new project. So there, the new business volume could be even higher. It could range up to even 50 to 60% of unidentified new business. But the growth could probably be only 5%. But that growth has to come from new projects, new clients. As opposed to that, take the example of a chartered accountant firm or a KPMG. There, once a client comes in, a large client comes in as an audit retainer or an audit fee, okay, that client will probably stay with us for 5 years, right? So there, the unidentified component could be lower because you have more certainty in that business that once the client comes, the stickiness is high. But as in an interior design firm, once you have done the interior design of a house, you will have to hunt for a new house project. So there, the unidentified new business is even higher. Pitching is even higher. Okay. So I hope you got a taste of how a B2B revenue budget looks like. Okay. There is a question in the chat box. Sir, during this process, should we have a faith on marketing department or client for unidentified new business? See, faith is a strong word, right? So what you need to do is question them in a scientific manner. Okay. Now, for example, to win two clients, okay, and let's say you have a hit rate of 10%, which means you need to be having 20 conversations in a month. To win 20 conversations or to at least reach 20 conversations, you need to be approaching or generating at least 100 leads in a month. To generate 100 leads, you need to be investing X amount on social media. You need to be investing X amount on branding, marketing, right? It's a math. If you're investing that amount, you will get 100 leads. If you're getting 100 leads, there'll be 20 conversations. If you're getting 20 conversations, then probably you will close 2 clients, right? So you can question on the parameters. If they are saying that we will win 5 clients, but in the pipeline, there are only 10 conversations which are going up. So is our hit rate really 50%? Do we normally win 50% of the clients that we pitch? Might not be. So this scientific questioning will come from FP&A. You don't need to blindly accept what the sales team is telling you. Okay, I hope you get the point. Cool. So this is how I gave you a quick taste of a B2B revenue budget build up right from the scratch. Okay. Now, the second biggest function that I mentioned to you about FP&A was management reporting, right? You would be providing different kind of slides in your management reporting pack. You have different kind of workings in your management reporting pack. Of course, in the interest of time, I can't cover all of them, but let me show you one slide, right? So here is a slide, which is basically a revenue bridge. Now, what is a revenue bridge? Okay. My 2024 revenue was $35.9 million. Okay. I'm working for an ice cream company. My revenue for 2024 was $35.9 million. And my revenue for 2025, budgeted revenue for 2025 is $55.3 million. Now the management would like to understand what is the difference? How are we going to reach from 35.9 to 55.3? Here is the breakup. Through price increases, we will achieve this much. Through volume increases, we will achieve this much. And of course, there'll be some products which might not be performing well. So they're going down in sales or volume. Products where we are not increasing the price. So there's no benefit of price increase that we are getting from there. So these 4 elements are your price variance. These 4 elements are your volume variance. And this type of a chart is called as waterfall chart. So any activity where you want to bridge the gap between 2 numbers. Now here we are taking actual versus or revenue 2024 versus budget. You can take actual versus budget, Q1 versus Q2, Q3 versus Q4, whatever you want to take. To bridge any 2 gaps, you can usually use a waterfall chart. That's what is one example of a slide, of a management report. I'm not even saving the entire management report. There could be a number of different kind of management reports that you will be publishing as part of your FP&A roles. Okay. Now that you have understood a little bit about FP&A and it is not about accounting standards or your rule books, how do you prepare for the shift to move into FP&A roles? Start by leveraging sector experience. If you've worked in, let's say, insurance company in accounting or audit role, try for an FP&A role in an insurance company. At least you have industry understanding. At least you understand the revenue drivers. At least you understand the terminologies of what is a premium, what is insurance, what is reinsurance, what is claim ratio. At least you understand some terminologies, right? So try and leverage your sector experience to move into an FP&A role. Find jobs through your network. An interesting statistic says that more than 50% of the jobs which are out there are unpublished jobs, which means by the time it is on the portal, it's already too late, which means it is filled by your network, filled by your referral, right? So do some smart networking to get your job through your network. Make compliance as your bridge. Yes, today you might be working in an audit or an accounting kind of a role. Okay. And you might be aiming for a finance kind of a role. But even if, let's say you're working in an audit firm right now, even if, let's say there is a finance and accounting kind of a vacancy, which is a hybrid role, it's not pure FP&A, Maybe there is 20% FP&A, 80% still financial reporting. You should take that role. At least you are going over to the industry side and treating this as this hybrid role as a bridge. And then after getting some experience, you can of course try and move towards commercial roles or pure FP&A kind of roles. So don't underestimate the power of that bridge of moving over to the industry side first. Learn tools like Power BI, Tableau. You have to learn the basics of it. You don't need to be a Power BI expert. You don't need to be a Tableau expert. At least understand to the extent that you're able to put it on your resume, saying that I'm comfortable using Power BI. Yeah. Again, Power BI and Tableau are not a substitute for your conceptual FP&A understanding. These are only tools that can aid you in your FP&A roles. Create a reason with a qualification. So today there are certifications available, qualifications available. If I would have been in your place, I would start by writing in chartered accountant and certified FP&A professional with 10 years of experience in the areas of financial reporting, financial analysis, management accounting, blah, 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 blah. So in the very first sentence in my resume, I'm telling you what am I bringing to the table. What people do normally is start with some career objective. My objective is to work in the finance function. Why? Who cares about your objective, right? Tell us what you're bringing to the table. Give us your sector exposure. Yeah. Start by qualification. Start with the right kind of skill sets. Upgrade yourself first. If you're ready, then the role will come to you. Don't expect the role to come to you first. Yeah. Now, these are some of the tips of how you can move into an FP&A role. Now, what are some of the next steps to prepare for FP&A roles? Now, I mentioned to you about these 3 buckets, right? So the first 2 buckets, right, is what you need to be successful on the industry side to climb up the ladder to become a CFO. Yeah. The first bucket is normally taught to you by your accounting qualification, CA, ACCA, whatever the course might be. But the second bucket is largely experience-based. Now, to learn this by understanding from somebody or somebody who has been there, done that. That's where courses of FP&A Professionals Institute come in handy for you. Okay. We have spoken to hundreds of CFOs and identified 5 core skill sets that CFOs today are looking for in their finance team. So what are those 5 core skill sets? First is core FP&A concepts: budgeting, forecasting, management reporting, variance analysis. All of these are core financial planning and analysis concepts. Then comes financial modeling. Financial modeling specific to FP&A, right? Your revenue model, your expense model, your scenario planning, your trend analysis, all of that is financial modeling. Then comes data storytelling. It is not only important how you're analyzing this data, but it is equally important how you are communicating this data as an insight to the business teams, because they don't understand 10,000 lines of Excel sheets. Business partnering. How do you partner with the business? How do you build strong cross-functional relationships, influence their decisions? Mere reporting is not important. Your report will say, okay, sales are down by 10% because of XYZ reason, right? But you'll have to go a step ahead and say, hey, sales are down by 10% because of these reasons. If we are able to do these 1, 2, 3 things, then we will probably be able to recover our sales. Now that is business partnering. Yeah. Then comes leveraging all the technological and AI developments that are happening in the finance and FP&A field. Okay. So these are the 5 core skill sets that CFOs are looking for. Our survey also tells us that 79% of the CFOs, which means roughly 8 out of 10 CFOs, say that it is generally difficult to find the right FP&A talent. I talk to generally a dozen CFOs every week. Okay. And one thing that I consistently hear is that I am not able to find the right FP&A talent, right? Why? Because there is huge demand for FP&A and there are not enough experienced FP&A professionals out there. So what do? We have to learn these skill sets through a formal coaching and training program. So that is why we at FPI have developed the CGFPA program. This is called Certified Global FP&A Professional Program. This is the global FP&A certification taught to you directly by CFOs and FP&A leaders. It has 10 comprehensive modules, which we'll talk about in a while. Everything to practical case studies and experiential coaching that you will get. All of them are practical case studies, real life looking like data that we have used in the course. We'll also be part of a global alumni network. CGFPA program has been taken by students with more than 25 countries so far. We'll get personalized coaching sessions, placement support. We have an active portal now, which is called fpnajobs.com. We provide all the placement support in terms of your resume review, your LinkedIn review, your mock interview preparation. We try everything in our power to kind of help you, give you your placement support. We don't provide any guarantee, but again, support is something which you can definitely expect from us. Right? Monthly Q&A sessions, any queries that you have, you can directly talk to the instructors and get them resolved in the monthly Q&A sessions. External speaker sessions, top global CFOs, FP&A leaders, tool providers, they all come once a month to FPI to explain what is happening in the latest in the FP&A world out there. So after the course also, we'll continue in the alumni community and you'll attend these guest sessions once a month. Then you have online access to all the materials and resources. We use best-in-class LMS. You'll have all the recordings to the materials that we are sharing, the recording of the videos that we are sharing. Okay, all of these things are already provided. Now, here is a live cohort-based coaching program. Yeah, it has 10 exhaustive modules. Okay, starts with basic introduction of FP&A. What is FP&A roles? What are they important? How are they different? Then comes your budgeting and forecasting. Okay, we have a B2B budget example, revenue budget, cost budget, headcount, cost of goods sold, inventory, all of these different kind of budgeting and forecasting techniques, traditional forecast, rolling forecast, all of these techniques are covered. Then AI for finance and FP&A is a newly introduced module where we're covering the basics of ChatGPT, Copilot, and the use cases of how you can use AI in finance and FP&A roles. Management reporting, different types of management reports that you will be providing or preparing as part of your FP&A role. One pager, flash report, monthly, quarterly reports, balance scorecard, right? KRA, OKRs, right? All of these different kind of reports that you will be providing is published or explained to you in the management reporting modules. Financial modeling, again, revenue model, business model canvas, understanding the three-statement financial model, your scenario planning, sensitivity analysis, all of these things are covered in financial modeling specifically for FP&A. This does not cover everything that you learn from an investment banking perspective. That's a different kind of modeling and valuation that is taught. But this is core related to FP&A. Then comes your data analytics. No matter what FP&A role you work in, one thing that will be common is that you will be dealing with large chunks of data, both financial and operational data. So you need to know your way how to navigate through this data. Right? That's where we teach Power BI, basics of Power BI, basics of SQL and data analytics tools, right? At least we take you to a level where you're comfortable using Power BI and SQL. We don't claim to make you an expert in these tools, okay? But at least take you to a level where you're comfortable using these tools in your day-to-day FP&A roles. Financial analysis. Financial analysis, there are a number of different kind of internal analysis, profitability analysis, right? 2x2 matrix, explaining the margin mix, right? Then you have your horizontal analysis, vertical analysis. All of these different kind of analysis are done internally within the company to analyze the performance of the business. That is what is covered in the financial analysis module. Storytelling and presentation. Like I told you, it's equally important how you are communicating your story to the business teams. They don't understand 10,000 lines of Excel sheets. So what visualization to use, some best practices on using chart types, presentations, waterfall chart, different types of matrices, how to use them, how do you prepare a CFO dashboard? All of these things are covered in a storytelling and presentation module. Then comes strategy. Any strategic decision taken in the company, whether it is expanding to a new market or acquiring a new company or starting a new product line, this would be incomplete without sound financial analysis. So in the strategy module, we look at all the popular strategic frameworks and also link them with how FP&A can support in these strategic decisions. Very helpful for you, especially once you rise up the ranks in your roles. The senior people will start talking strategic language. And if you don't understand that and correlate it with your roles, then you won't be able to progress to these leadership roles. Then comes business partnering, your business acumen, ability to partner and build relationship with the business teams. We cover all of those things with practical case studies and examples that we have implemented in our careers. So all in all, 10 solid modules, everything that you need to be successful at FP&A roles. So don't just think about CGFPA as a course, right? It's more like a 20 years of our fast track experience, fast tracked into 6 months. So that's what is the CGFPA program. Now, the eligibility criteria for CGFPA is that you need to have at least a bachelor's degree or an equivalent in finance, accounting, or business. Alternatively, you may have your professional qualifications like CMA, ACCA, or whatever equivalent accounting qualification of your country. We don't claim to be a substitute for your primary qualifications. In fact, we are a supplement for these qualifications because the core FP&A concepts are not taught in these qualifications. We're also CPD UK accredited. You can claim continuing credits in any of your accounting qualifications where you are associated with. Now, how will you get the CGFPA award? There are two things. One is you need to attend the classes live online, at least 50% of the classes. Roughly, it's a 6-month program. Every Saturday, we meet for 2 hours. So roughly, there'll be 24, 25 sessions. You need to attend at least 50% of them live. Then submit the capstone assignment. Capstone assignment is basically a simple assignment of preparing an end-to-end budget and a presentation. All the guidance and everything will be provided on that. You need to prepare that capstone and submit it. Once you have done these two, you will be eligible for the final examination. The final examination is a 2 hours, 100 marks, multiple choice questions examination. Once you complete that examination, then you'll be awarded a certificate from India Professionals Institute. Okay. Now, the ROI for a program like this, I leave it to your imagination. But the course fee investment in this program is $1,695 USD. There's a payment plan available which you can pay in 5 equal installments. The duration of the program is 6 months, okay, where you are required to be present in the class every Saturday for 2 hours. And apart from that, about 1 to 1.5 of your own time investment is required to go through the pre-reading materials. Sometimes we might share some case studies, pre-reading materials or some videos to go through. You need to invest time in doing that and then come prepared to the classroom when we are discussing our case studies and examples in the classroom. Okay. So the next cohort is starting, the orientation for the next cohort is on 6th of September 2025. 6th of September 2025. We meet once every Saturday for just 2 hours. Okay. Roughly about 100 to 120 hours of content. The date that you need to remember is the first round of applications for the current cohort, which is the upcoming cohort, which is cohort 6, is going to be closing. The first round of applications close on 31st of July 2025. Okay. So I'll let Asif share the application link and the brochure in the chat box. Make sure that you at least fill in your applications. Let our team evaluate your eligibility. Let them come back to you with an offer, right? And then you can decide whether you want to continue or no. Okay. Don't just take our word for it. There are tons and tons of testimonials. We have only captured a few of them on the screen. You can reach out to any of our alumni, participants, and they can give you some feedback about it. Right now, almost more than 100 enrollments have happened in the same program so far. Currently, both cohort 4 and 5 are running simultaneously. Cohort 6 is going to start in September. So you can reach out to any of our past students and they'll tell you how the program has benefited them. Many of them have been able to land FP&A roles during the program itself. Many of them have been able to implement some frameworks that we have shared in their existing roles. Right? A lot of stories are there. You can reach out to any of them and they'll tell you more about it. Thank you all for attending. Asif and I are always available on LinkedIn. Feel free to reach out to us if you have any questions. Hoping to see you in one of our programs. All the very best for your finance careers.
Thank you so much. Thanks, everybody.
Everyone.
Bye-bye.
Bye-bye. Bye-bye.